it's a very dangerous time for investors. Times like this always are, where there's a huge temptation to react to every piece of news and change the positioning of your portfolio, only potentially to get whipsawed then as more news emerges. So as we woke up on Wednesday morning, many people were expecting a different result. That changed, of course. And here we are on Friday morning, people growing increasingly confident about what the result will be. But we, I think, have an indication that things may change further still. There's lots going on. And so whenever an investor's in this situation, it's so important to take a step back, not make any precipitative decisions or changes to portfolios, but really think about the long term. Think about what's going to drive company revenues and risk over that long-term period. Because again, that's what investment's all about. It's tough to remember that in these circumstances, but we'd certainly encourage people to not try and trade through these situations, not try and predict the outcome of the election at this stage.
Dan, if we take a look at healthcare, for instance, there are dual themes going on, enormous effort to come up with treatments and vaccines from that sector. But that said, the market was somewhat cautious around healthcare, given Supreme Court will take a look at Obamacare. Some of the election commentary has suggested if there is going to be a split house, that you may not see any legislation rewritten because of the Senate if it remains Republican. So where does that leave the way the market should think about healthcare at this point, based on the politics and coronavirus treatments and vaccines?
Well, yes. So as we look at healthcare, the first thing that we see is that it's not as attractively priced as it was at the beginning of the year. And that, for all the obvious reasons we can think of, that people are enthusiastic about healthcare. And again, as we think about the future for healthcare, then there's two things at play. The first is, as you say, possible changes in legislation that will affect revenues for healthcare. But remember, that's going to be different in different parts of the healthcare market. There's lots of different constituents in healthcare. It's not a homogenous lump. And so investors need to think about how the politics will potentially impact the outcomes for different parts of that market and discount that back clearly in terms of the way they're thinking about risk. But second, what we see is different drivers of the healthcare market, and that can be quite important in a portfolio. So many of the good opportunities we're seeing at the moment are stocks that are linked to recovery or growth in the overall economy. And of course, with healthcare, as you've said, it's very different drivers. And so even if healthcare is not as cheap as it was at the beginning of the year relatively, then it can play an important role as a diversifier in portfolios.